Welcome back. You're still with us here on Markets Today. Let's talk about the rest of the headlines that we're tracking for you. The fourth headline of the day, Cipla, was the one which fell about 1% in today's trading session after the US drug regulator made 3 repeat observations on its Goa unit. What does that mean? Ekta Batra joins in with the details.
Thanks for that. Well, the news on Cipla today is that we managed to access the Form 483, which is basically the 6 observations which were issued to Cipla's Goa facility. Now, just to give you a background, it was inspected from the 16th to the 26th of August. At that point in time, it was issued 6 observations by the US FDA. Remember, this particular plant already has been under the US FDA scanner because they have a warning letter which was issued to them in Feb 2020. Now, in terms of the details of these 6 observations, that's basically the new piece of news for Cipla today. Is it has indicated, the Form 483 has indicated around 3 repeat observations. Remember, those 3 repeat observations are from the past inspections, and the concern is that it is going to definitely be more difficult for them to solve, considering that they have a warning letter on this particular facility. The repeat observation means that the US FDA is not satisfied with the remediation from the last inspection, and those problems still sustain and have sustained into this inspection as well. Now, in terms of the impact, it is definitely negative. One of the major disclosed products that could get impacted is a cancer drug, Abraxane, from this particular plant. It was expected to be launched in late FY23. Estimates have built in $20 to $30 million from this particular drug, contributing to around 2 to 4% of core EPS in FY24. Nomura wrote on Cipla today, they have a buy target price 1195. As a base case, they believe they do not expect the inspection outcome to have a material impact on earnings.
All right, Ekta, thanks a lot for that. Let's talk about the fifth headline of the day. Mcleod Russel gained about 20% on news that Carbon Resources had told CNBC-TV18 that they've submitted a non-binding letter of interest to the lenders of the debt hit tea maker. Vivek Iyer broke the story and joins us with the details. Vivek.
Well, that's right. So the stock in focus is Mcleod Russel, and it appears as though a very large deal is brewing in the Indian tea market. So a company called Carbon Resources Private Limited, that is involved in the production of calcined petcoke, CPC, mainly used in metal industries, is looking to diversify into non-core businesses, and it appears, and we have access to this particular LOI that the company has submitted to the lenders. In this particular LOI, the company Carbon Resources Private Limited has marked it to SBI Capital Markets and ICICI Bank, and they have offered a holistic solution as far as the debt resolution plan of Mcleod Russel is concerned. They have offered almost 1,245 crore towards almost 1,650 crore worth of outstanding debt that Mcleod Russel continues to owe to the lenders. So this particular deal, Carbon Resources has proposed that they would be funding this particular deal via 300 crore of equity infusion and 945 crore of new debt that they would be taking on their own books. Now, this particular deal could be quite important given the fact that Mcleod Russel continues to remain a very important developer as far as the Indian tea market is concerned. Also, Carbon Resources, in order to show very clear strategic intent, on Friday had picked up almost 49.5 lakh shares via NSE, and we understand that a further stake sale was done, a stake buy was done on the BSE as well. So with this particular stake purchase, they would be owning over 5% stake, and this would propel them to amongst the top 3 shareholders as far as Mcleod Russel is concerned. We reached out to all of the concerned parties. Carbon Resources came back to us. They confirmed the CNBC-TV18 exclusive. They said that we have presented a non-binding LOI to the lenders of Mcleod Russel.
Take that point, Vivek. Thanks a lot for that. Adani Wilmar is the other stock, and it's expanding its ready-to-cook segment with rice-based products as well. The company has told CNBC-TV18 that their focus remains on this segment rather than ready-to-eat. They're focusing on ready-to-cook as against ready-to-eat. The stock ended about 1.5% higher in today's trading session. Shilpa joins in with more details. Shilpa.
Well, Adani Wilmar is looking to expand its ready-to-cook range, and this is part of its larger expansion plans where it wants to expand the food and FMCG business. So what we're given to understand is that it is going to be launching a whole range of rice-based products under the ready-to-cook segment, one of which will be a DIY or do-it-yourself biryani kit that it will launch under the Kohinoor brand. Now, Kohinoor, which it acquired in May, it is also looking to leverage this brand as well to be able to launch a lot more rice-based products. It will also be looking at at a range of other RTC rice-based products like, fried rice, Mexican rice, other Thai rice, etc. And these, however, could either be under Fortune or Kohinoor. The company says that call it has not taken yet. One or two products will be launched this fiscal and the rest will follow later. It is also looking at expanding its breakfast segment as well. There it has already launched Poha, where it has about 2 variants. It's going to be launching a lot more localized variants for that particular product, and it will also be expanding that range with similar breakfast items as well. Now, currently in the RTC segment, it sells DIY khichadis, or rather ready-to-cook khichadis, and this segment will now be expanded going ahead. Back to you.
At that point, Shilpa, thanks a lot for that. So the packaged food segment in India is what everyone's looking at. In that, Adani Wilmar wants to differentiate itself by getting into ready-to-cook as against ready-to-eat. And in either case, both companies like Patanjali Foods and Adani Wilmar are moving away from their traditional branded edible oil businesses and looking at more margin accretive food businesses as well. But let's talk about another stock that gained today. We had Bajaj Finance up over 3% after Jefferies raised their target price on the stock. What was Jefferies' rationale? Abhishek Kothari joins in with the details on that one. Abhishek.
Well, it's an interesting note coming in from Jefferies on Bajaj Finance. They have a hold recommendation over there, but they have increased the target price to 8,000 per share from earlier target price of 7,300 per share. The interesting part that they say is that they have mentioned that Bajaj Finance has a shot at being the first NBFC to launch a credit card if at all RBI approves. So this would enable, Bajaj Finance to take the product, that is credit card, into deeper geographies as against the top 100 towns where it sells RBL Bank or DBS Bank's credit card. So Bajaj Finance has a huge network of around 3,500 plus branches, reaching about 140,000 merchants as well as 6 crore customers that they have. So if it achieves a 20% to 40% in terms of cross-sell to their non-delinquent, that is not NPA customer, which is a base of about 4 crores, this would mean around 900 to 1700 crore of profit in the next 3 years. So this is about 5 to 10% of FY25 profit that Jefferies has estimate and would add as a growth driver. So they have raised the earning estimate and they believe that Bajaj Finance can have a CAGR in terms of profitability of around 28% between FY23 to 25. Back to you.
Abhishek, thanks a lot for that. There was a whole host of other stocks that were in focus today as well. The kinds of Welspun Corp. We did have some names coming in with regards to Schaeffler as well, which was under pressure. And we had, Inox Wind as well, which was in focus. Surbhi Sutaria, our new research joinee, has more on that. Surbhi, take it away.
Welspun Corp saw some positive momentum in today's trading session. This was mainly because they have received an order for carbon capture pipeline project. This order is to supply high-frequency welding pipes and it will be manufactured in their plant in the US. The order is expected to be executed in FY24. The next one is Inox Wind. Sources tell CNBC-TV18 that its subsidiary, Inox Green Energy, has got SEBI's nod to launch a 740 crore IPO. Sources also suggest that the IPO, which is a mix of fresh issue and OFS, will be launched in the second half of October this year. The third one is Schaeffler. This was under pressure today after the brokerage Kotak Securities downgraded the stock to a sell with a target price of 2,600. They say that the strong to medium-term growth outlook has already been priced in and the current valuations of 52 times calendar 2024 earnings are expensive. They further say that the company's organic revenue growth in the last decade has only been 7 to 8%. Additionally, 75% of its revenues come from automotive OEM and the replacement segment, where they expect the industry revenue volumes to grow at 7 to 8% in the medium term.
All right, Surbhi, thanks a lot for that. So Surbhi is our latest joinee on the research team at CNBC-TV18. Wish you good luck on that as well. But with that, we are out of time on this edition of Markets Today. Thank you for watching.